The revaluation of the Iraqi dinar has become more than just a long-speculated financial event. It has turned into a catalyst that has sent shockwaves rippling through the global financial system, shaking banking floors from Baghdad to Wall Street, and from the bustling exchange hubs in Dubai to the discreet wealth management offices in Zurich. What once seemed like a distant dream for currency holders has now erupted into a financial reality with consequences that bankers, economists, and government officials are scrambling to contain. The Iraqi dinar, a currency long undervalued due to war, sanctions, political instability, and economic restructuring, suddenly found itself catapulted into the spotlight when the long-awaited revaluation was confirmed and implemented. Exchange rates that had been stagnant for years shifted overnight, creating enormous volatility, opportunity, and chaos within global exchange networks. For years, currency speculators had held on with hope, often dismissed as fringe believers in an improbable event. Yet the sudden move from speculation to reality has forced even the most skeptical financial institutions to acknowledge a new landscape, one in which trillions of dollars in wealth are moving across borders, portfolios are being recalibrated, and banks are struggling to manage overwhelming demands. The scenes on banking floors are unprecedented. Traders accustomed to monitoring small, incremental movements in foreign exchange markets suddenly found their screens lit up with massive surges in the value of the IQD. Phone lines jammed, emergency meetings convened, and compliance teams rushed to adjust internal policies. Exchange centers, already aware of mounting anticipation in recent weeks, became overwhelmed by dinar holders eager to cash in their paper for life-changing sums. What had once been routine financial management transformed into crisis-level coordination. Senior executives were pulled from boardrooms into real-time command centers as liquidity challenges, system overloads, and security concerns began to pile up. At the heart of this frenzy lies Iraq's decision to anchor its revaluation strategy to a wider modernization effort. Officials in Baghdad had repeatedly stated their intention to stabilize the national currency, attract foreign investment, and reassert Iraq's role as a central energy and trade hub. The announcement of the revaluation was framed as a national victory, a declaration that Iraq had moved beyond decades of instability toward a future of financial sovereignty and prosperity. For the Iraqi people, the revaluation was more than a technical adjustment, it was an affirmation of pride, progress, and regained dignity on the world stage. But for the global financial system, it unleashed a cascade of implications few were fully prepared to handle. The initial surge came when exchange windows opened across several major international banks. Lines formed outside flagship branches of institutions such as J.P. Morgan Chase, Wells Fargo, and HSBC. Currency holders, some who had waited for over a decade, arrived with briefcases, safes, and envelopes filled with dinar notes, eager to convert them at newly established rates. Some walked out with receipts reflecting generational wealth, others with appointments for structured redemptions designed to control liquidity and prevent destabilizing floods of cash. The rush created a modern gold rush atmosphere, but unlike historical booms, this was driven by digital systems and interconnected financial markets where even a slight delay in processing could send ripple effects through the global economy. Banking staff faced immense pressure. Compliance officers had to triple-check anti-money laundering protocols, fraud detection systems were strained by the sudden influx of high-value transactions, and branch managers scrambled to maintain order as crowds grew restless. In some regions, police were dispatched to maintain security around exchange centers. The sudden transformation of currency holders from ordinary citizens into millionaires or billionaires created a mixture of excitement, confusion, and in some cases, opportunistic scams. Financial institutions were forced to issue public warnings, reminding clients to only engage through official channels and to beware of fraudulent brokers offering too good to be true rates. On trading floors, the shockwaves were even more intense. Currency desks that had long ignored the dinar as a negligible factor in global markets now faced heavy volumes of trades as investors sought to reposition portfolios. Hedge funds that had quietly accumulated dinar in speculative plays saw returns magnified beyond anything they had modeled, while others who had dismissed the potential entirely scrambled to catch up. The IQD was suddenly thrust into the same conversations as the euro, the dollar, and the yuan, with analysts debating its long-term trajectory and potential impact on Middle Eastern economic power structures. The oil market played an undeniable role in this shift. Iraq, with its vast reserves, has always held significant leverage in global energy discussions. By revaluing the dinar, the government effectively signaled a new strategy of using its natural resources not only for revenue but also as a foundation for financial sovereignty. Oil contracts denominated in dinar gained attention, and energy companies began revisiting pricing strategies and trade agreements. This integration of currency and commodity power amplified the shockwaves across markets, forcing global players to reevaluate positions. Within Iraq, celebrations erupted as citizens saw their purchasing power rise dramatically. Shops, businesses, and local markets adjusted prices, often in confusion, as the real-world impact of the revaluation rippled through daily life. For many Iraqis, who had endured years of economic struggle, the moment symbolized hope for a brighter future. Yet economists cautioned that with rapid currency appreciation comes challenges: export competitiveness, inflationary pressures in certain sectors, and the need for robust monetary policies to stabilize long-term gains. The international banking community was caught between excitement and caution. On one hand, the influx of liquidity from dinar holders meant new deposits, investments, and opportunities for banks to expand relationships with wealthy clients. On the other hand, the sudden redistribution of wealth raised concerns about inflationary pressures, speculative bubbles, and systemic risks if not managed carefully. Financial regulators across the globe issued statements, with some countries imposing temporary restrictions to slow the tide of conversions until systems could be updated. Technology infrastructure became a central battleground. Banking IT systems, designed for steady and predictable volumes, were tested by unprecedented transaction loads. Digital wallets, online banking portals, and wire transfer systems experienced outages and delays. Cybersecurity teams raised alarms about opportunistic hackers attempting to exploit vulnerabilities during the chaos. The sheer scale of the event highlighted both the interconnectedness of the financial system and its fragility when confronted with an unanticipated surge. Wealth managers found themselves flooded with calls from newly wealthy clients seeking immediate guidance. The sudden influx of millionaires created demand for financial planning, tax strategy, and estate structuring at levels not seen since tech IPO booms or cryptocurrency surges. Many of these clients, unprepared for such rapid wealth transformation, faced difficult questions about how to manage newfound fortunes responsibly. Conversations about generational wealth preservation, philanthropy, and investment diversification dominated advisory sessions. Meanwhile, governments outside Iraq scrambled to assess the implications. The U.S. Treasury, European Central Bank, and International Monetary Fund issued statements affirming their support for Iraq's economic sovereignty while cautioning against speculative excess. Currency markets are tightly interwoven with geopolitics, and the revaluation of the dinar immediately became part of larger conversations about global economic power balances. Questions about whether other undervalued currencies could follow Iraq's path circulated widely, with analysts pointing to nations with resource-backed economies as potential candidates. The shockwaves extended beyond finance into politics. Leaders in the Middle East framed the revaluation as a triumph for Iraq and, by extension, for regional economic independence. Negotiations around trade, infrastructure development, and energy partnerships were suddenly recalibrated to account for Iraq's new financial status. Rivalries intensified as nations sought to secure favorable positions in light of the shift. Global powers, recognizing the strategic importance of Iraq's move, initiated diplomatic efforts to ensure alliances and agreements remained intact amid the upheaval. The media amplified every development. Headlines declaring the historic revaluation dominated financial news outlets, while mainstream channels captured dramatic footage of crowded exchange centers and jubilant celebrations in Iraqi streets. Social media became a hub of real-time updates, with stories of ordinary people becoming millionaires shared alongside warnings about scams and fraudulent schemes. The narrative oscillated between optimism about life-changing opportunities and caution about the risks of mismanagement. For banks themselves, the event has already become a defining moment. Internal reviews are underway to evaluate what worked and what failed during the initial surge. Training programs are being redesigned, liquidity buffers are being reassessed, and contingency planning is taking on new urgency. In many ways, the revaluation of the Iraqi dinar has become a stress test for the global banking system, revealing both its strengths in adaptability and its weaknesses in resilience under extreme pressure. Even as the initial shockwaves continue to reverberate, questions remain about the long-term impact. Will the dinar hold its revalued strength, or will market corrections erode gains over time? Will the influx of wealth create sustainable growth in Iraq, or will it fuel inflation and inequality? Will other nations seek to replicate Iraq's model, sparking a wave of currency revaluations that could reshape the financial order? These uncertainties ensure that the story is far from over, and banking floors will remain on edge as they adapt to the unfolding realities. Yet one truth is undeniable. The Iraqi dinar has transformed from an obscure, often dismissed currency into a global force that has captured the attention of governments, investors, and citizens alike. Its revaluation has sent shockwaves that continue to reshape markets, challenge institutions, and redefine the possibilities of financial transformation. The moment has demonstrated how quickly the foundations of wealth and power can shift, reminding the world that in an interconnected economy, no currency is ever too small to spark a global earthquake. The saga of the Iraqi dinar revaluation is not just about numbers on exchange boards, it is about the human stories behind those numbers. Families who can now afford education, healthcare, and housing they once thought impossible. Entrepreneurs suddenly armed with capital to launch businesses. Retirees finally securing a future free of financial anxiety. These are the ripple effects that extend beyond banking floors and into the lives of millions, underscoring the profound societal impact of what may appear to be a purely financial event. As the dust begins to settle, global attention remains fixed on Iraq and the dinar. Whether this moment proves to be the dawn of a new financial era or a cautionary tale of market exuberance will depend on decisions made in the weeks and months ahead. What is certain, however, is that the shockwaves unleashed by the revaluation have already changed the landscape of global finance forever, ensuring that the story of the Iraqi dinar will be studied, debated, and remembered for generations to come. Like and subscribe for more videos.